All right. Welcome in, everyone, to our deep dive today into some pretty major global stuff happening right now.
Yeah, we're looking at a mix of economic trends and then also some really interesting corporate moves.
Exactly. And we're going to be pulling all this from the Capital Brief newsletter.
Yeah.
This is from March 18th, 2025.
Okay, sounds good.
So we're going to be looking at things like how U.S. economic policies are kind of creating these ripple effects all the way over to Australia. And then we'll get into some of the corporate world and all the crazy acquisitions and just shakeups that are happening.
Yeah, so it's almost like a game of high-stakes chess, you know? These players are making moves all across the board, and it's fascinating to watch how it all unfolds.
Exactly.
Yeah.
And of course, we can't leave out the investors, right? They're the ones watching every move, trying to predict what's going to happen next.
Yeah, they're the watchful eyes, observing everything.
So speaking of big moves, the OECD is basically waving a huge red flag about these U.S. tariffs.
Oh,
They're saying they're taking a really significant toll on the global economy, and it's causing all these growth forecasts to be cut for a lot of the G20 nations.
yeah, and what's really striking is that even the U.S. economy itself is expected to take a hit, you know? Their growth could slow down from like 2.8% last year to only 1.6% in 2026.
Wow.
That's a pretty steep drop.
Yeah, it's a big one.
And it just shows how interconnected our global economy really is.
Yeah, for sure. So it makes you think, what does this global slowdown actually mean for someone like you listening right now?
Right.
Is it going to affect your investments, your job, maybe even just the cost of your groceries? I mean, how does this all actually play out in Australia specifically?
Yeah, good question. So while Australia's growth is predicted to hold up, better than some, it's still going to be weaker than we initially thought it would be.
Right.
And this is where things get interesting, politically speaking.
Okay.
So Australia's treasurer, Jim Chalmers, is saying that these U.S. tariffs are really disappointing, but he's resisting putting retaliatory tariffs in place.
Yeah, I mean, I get that he doesn't want to spark a trade war, but is that actually the best strategy?
Right.
What if Australia ends up just taking the hit economically with no real benefit?
Yeah.
Like, is there any way to push back without making it a race to the bottom, as he put it?
It's tough. It's a really tough call.
Yeah.
Almost like walking a tightrope, you know? On the one hand, fighting back could make things worse
Yeah.
and just totally damage global trade.
Right.
But then on the other hand, just accepting these tariffs without doing anything about it, well, that might seem like we're weak.
Yeah.
And it could even hurt Australia's economy in the long run.
For sure. Especially with estimates that are saying we could see tariffs of 2% to 8% on something like $30 billion worth of Aussie exports to the U.S.
Yeah, that's a lot of money.
Yeah, that's no joke. But let's switch gears a little bit.
Okay.
Let's talk about some of these huge moves happening in the corporate world.
Yeah, for sure.
We've got CoStar making a $2.7 billion bid for Domain.
Right.
That's the Australian real estate website. And then Nine Entertainment, they own the majority stake in Domain, and they've just gone silent.
It's really interesting, right?
It is. It's been almost a month since that bid, and still nothing from Nine.
It makes you think, what are they doing?
I know. Are they waiting for a better offer? Are they fighting internally about whether to sell it all? I mean, their silence is kind of deafening.
Totally. It really speaks volumes.
Yeah, it's like they're playing poker and we're trying to read their tells.
Exactly.
Meanwhile, we got PepsiCo. They just spent $3.1 billion to buy Poppi.
Whoa. What's Poppi?
So Poppi is this prebiotic soda brand.
Prebiotic soda. I haven't heard of that.
Yeah, it's basically marketed as this healthier alternative to your typical soda.
Interesting.
Yeah, so it's a really interesting example of this larger trend we're seeing, right? You've got PepsiCo, this massive player in the beverage industry, betting big on this whole health-conscious consumer movement.
Yeah, makes sense.
They're seeing that people want healthier options, even when it comes to things like soda. And it makes me think of that, saying, vote with your dollar.
Yeah.
Like, consumers are really becoming so much more aware of what they're putting into their bodies, and these companies, they're having to change.
Totally.
But still, PepsiCo paying over $3 billion for a soda brand, even a trendy one, it just feels like a gamble, doesn't it?
I see what you mean. I mean, it just shows how much value these companies place on grabbing a specific part of the market, right? They're not just looking at Poppi sales today. They're looking at the future, at this whole group of health-conscious consumers who are only going to get bigger.
Yeah.
So they're basically buying a ticket into that market, a market they think is going to explode.
So that's a really interesting way to look at it.
Yeah.
It makes you wonder what other kind of niche markets are going to be the next big thing.
Right. What's going to be the next Poppi?
Exactly. But let's shift gears again and talk about another big player,
Okay. Who are we thinking?
Intel.
Ah, okay.
So they've brought in this new CEO, Lip-Bu Tan, and he is shaking things up.
What's he doing?
Staff cuts, new focus on making chips for AI.
It seems like AI is everywhere these days. Every industry is being changed by it.
Totally. It's not science fiction anymore. It's here.
Right.
And it's changing everything.
For sure. And for Intel, a company that's been struggling to stay on top in the chip market, this is a huge moment.
Yeah,
This new CEO, Tan, his strategy is bold.
for sure.
He's basically saying that AI is the key to getting Intel back on top in the tech world.
So high risk, high reward.
Yeah. Will he be able to pull it off?
Exactly. It's like watching a high wire act, full of suspense.
Yeah. You never know what's going to happen.
But for now, let's switch our focus to a different kind of titan.
Okay.
The legendary investor, Warren Buffett.
Ah, Warren Buffett. He's always up to something interesting.
Always so. Warren Buffett and his company, Berkshire Hathaway, they just increased their stake in Japan's 5 biggest trading houses.
Wow. The ones that handle everything, right? From energy to food to materials.
Exactly. Everything.
That's a big move.
It is, and what I find so fascinating is that Buffett, this guy known for playing the long game, being cautious,
Right.
he's making this play while sitting on a record $525.34 billion in cash.
Wow. $500 billion.
It's crazy.
It's like a huge war chest. It makes you wonder, what's his strategy?
I know.
Does he see something special in the Japanese market, or is he actually worried about something bigger?
Maybe he's seeing instability in other markets and he's looking for a safe place.
Maybe.
After all, those Japanese trading houses, they're like deeply rooted in the country's economy.
Yeah, they're not going anywhere.
Exactly. So maybe he's not just looking for safety, but an opportunity for growth that other people are missing.
It's like he's playing a different game altogether.
Right. One with a longer timeline and maybe even bigger rewards.
Exactly. He's not just reacting to the little ups and downs. He's thinking decades ahead.
It's amazing.
That's what makes him so fascinating. His moves, they show a deeper understanding of not just the markets, but like global shifts and long-term forces.
It's incredible. He's like a chess grandmaster, always thinking several moves ahead.
Totally. And we're all trying to figure out what his next move will be.
Exactly. Well, we'll have to keep watching.
Definitely.
All right. So let's move on and talk about some other interesting developments in the Australian financial scene.
Sounds good. What have you got?
Well, there's been some buzz around SmartPay. They've actually received 2 takeover bids.
2! Wow, it's a bidding war.
It is, and one offer is from Tyro, a pretty well-known name in Australian payments.
Uh-huh. Yeah, I know them.
But get this, the other buyer, it's a mystery.
Oh, wow. That's interesting. Adds a whole other layer to it.
It's like a financial whodunit.
Totally.
What do you think's driving all this interest in SmartPay?
Well, they're a big deal in the small business payments world, which
Yeah.
is a market that's growing super fast.
Right.
So both Tyro and this mystery buyer, they probably see SmartPay as a way to expand their reach and get a bigger piece of that market.
So it's not just about what SmartPay is worth now, but what they could be worth in the future.
Exactly. It's like that chess game again.
Right. Everyone's trying to guess what's going to happen next.
For sure.
Okay, so speaking of the future,
Yeah.
let's dive into something that's been making waves in the financial world lately.
All right, lay it on me.
Debt capital markets.
Okay.
Now, I know that might sound a little intimidating,
Yeah, maybe a little bit.
but stick with us here. Debt capital markets are basically where companies and governments go to get money by issuing bonds.
Okay. That makes sense.
And what's really interesting is that there's a recent survey done by SS&C Intralinks,
Okay.
and it revealed some pretty fascinating trends in this space.
Like what?
Well, one of the big things is that there's this growing appetite for alternative investment.
Alternative investments.
Yeah, we're seeing people moving away from those traditional assets like your stocks and bonds,
Right.
and they're looking for new ways to get returns.
So what counts as an alternative investment?
Well, it's a pretty broad category, but it includes things like private equity, real estate, infrastructure, even hedge funds.
Okay, so stuff that's not your typical stock or bond.
Exactly. Think of it this way. If traditional investments are like a familiar meal, something you always eat.
Okay, I like that.
Alternative investments are like trying some exotic cuisine.
Okay.
Could be amazing, could be a little risky.
Right, never know.
So why are investors turning towards these more exotic options?
Well, there are a few reasons traditional assets haven't been doing so well lately. Low interest rates,
Yeah.
a lot of volatility in the stock market, so
Yeah.
they're less appealing.
So investors are basically looking for ways to diversify and maybe get bigger returns even if it means taking on more risk.
They're stepping out of their comfort zone.
Exactly. But with bigger potential rewards often come bigger risks, right?
Absolutely, that's the trade-off.
Yeah.
Alternative investments can be harder to turn back into cash.
Right. Less liquid.
Exactly, and they can be more complicated. You might need specialized knowledge to really understand them.
It's not something you just jump into without doing your homework.
Exactly, you got to understand the risks.
Well said. It's like anything else. Got to do your research before you dive in head first.
Right.
But speaking of diving in, that SS&C Intralink survey, it also showed some really interesting regional trends.
Oh, yeah. Like what?
Emerging markets are getting a lot of attention.
Interesting.
Countries like China, India, Brazil, they're seeing huge economic growth, and investors are seeing opportunity there.
It's like the financial world is expanding, new players are coming in and challenging the old guard.
It's exciting and kind of daunting all at the same time.
It definitely keeps things interesting.
For sure. And we can't forget about technology's role in all of this.
Oh, yeah, huge impact.
So the survey highlighted how technology is completely transforming these debt capital markets.
Okay, how so?
Well, you've got these fintech platforms that are streamlining the whole investment process and making it more accessible to everyone.
Right, fintech, that's short for financial technology, right?
Exactly. Basically, any technology that's being used to innovate and improve financial services.
So like online lending platforms and robo-advisors?
Exactly.
I've heard a lot about those.
Yeah, they're popping up everywhere. And then there's AI, which seems to be, well, everywhere these days.
It really does, and it's changing everything.
AI is definitely making its mark on debt capital markets.
In what way?
Well, it's being used to analyze tons of data, find patterns, and give investors insights.
So it's like having a super smart assistant helping you make financial decisions.
Kind of, but we can't forget that AI is still just a tool.
Right, it's not magic.
It can process information way faster than we can, but it's not a magic bullet.
Definitely.
We still need humans to make sure it's being used responsibly.
You can't just trust the algorithms blindly.
Exactly. No matter how smart they seem, we still need critical thinking and human judgment.
Makes sense.
But with all these trends happening at the same time,
Yeah.
alternative investments, emerging markets, technology on the rise, it feels like debt capital markets are at a turning point.
It's a dynamic landscape for sure, constantly changing and adapting.
Yeah, and as we've seen in this deep dive, staying informed is key to navigating it all.
Couldn't agree more. But let's not forget one of the most important parts of finance, the human element.
Right. We've talked a lot about numbers and trends and strategies,
Yeah.
but at the end of the day, it's people making the decisions, taking the risks, shaping the future.
That's so true. Whether it's Warren Buffett making a huge investment or Jim Chalmers figuring out trade relations, or even just a small business owner trying to get funding, there's a human story behind every financial transaction.
Yeah, and understanding those human stories, that's key to really understanding the financial world.
Couldn't agree more. It brings it all to life.
Totally. Yeah, it's a good reminder that finance isn't just some abstract concept, right?
Totally.
It impacts real people's lives.
Yeah, for sure.
In really tangible ways.
I think that's what makes it so captivating. There's always this human element driving the numbers, the trends, everything.
For sure. And speaking of captivating, I think it's safe to say we've covered a lot of ground in this deep dive.
We have. Where do we even begin?
I know. We've got those ripple effects from the U.S. tariffs, the power plays happening in the corporate world, the rise of alternative investments, and even AI's influence.
It really highlights how interconnected everything is in the financial world.
Doesn't it?
What happens on one side of the world can totally impact something happening thousands of miles away.
Yeah, and that's why staying informed is so important. It's not just about making money.
Right.
It's about understanding the forces shaping our world and making choices that actually align with our values and goals.
Well said. Whether you're a seasoned investor or just starting out, knowledge is power.
For sure.
The more you understand about all these trends and these big moves companies are making, the better you'll be able to navigate this crazy financial world.
And maybe even spot some opportunities that others might miss, right?
Exactly, like Buffett's move into Japan.
Right. Who knows what else is out there waiting to be discovered?
It's all about keeping your eyes open, staying curious, being willing to think differently than everyone else.
I love that. And as we wrap up this deep dive, I think that's the perfect message to leave our listener with.
I agree.
Don't be afraid to ask questions, to look for different perspectives, to think for yourself.
Because at the end of the day, it's all about making smart decisions, taking calculated risks, and shaping your own financial future.
And hey, Who knows, maybe someday you'll be the one making headlines.
Warren Buffett.
Exactly, with some strategic move that takes everyone by surprise.
I like that, the listener making headlines. It could happen.
Anything is possible in the world of finance. That's what makes it so exciting.
Totally.
So until next time, keep exploring, keep learning, and keep diving deep into the financial world.
Yeah, it really is amazing how even when we're talking about these like big picture things, debt capital markets and global economies, it always comes back to the people.
Yeah, it's a good reminder that finance isn't just numbers and charts.
Yeah.
It's about real people making decisions, taking risks, living their lives. Absolutely. And speaking of people making decisions, I think it's safe to say we've covered a lot of ground in this deep dive.
We have. It's been quite a journey.
I know, from U.S. tariffs to corporate shakeups, the rise of alternative investments. We even touched on AI.
And it all shows how interconnected everything is in the financial world.
Yeah, it really does. What happens in one place can have a huge impact somewhere else entirely.
Exactly. And that's why it's so important to stay informed, right? It's not just about making money.
Right.
It's about understanding how the world works, making choices that make sense for you, for your life.
Well said. Whether you're a seasoned investor or just starting out, knowledge is definitely power.
The more you know about these trends and what these big companies are doing, the better off you'll be.
Yeah, and you might even spot opportunities that other people miss, like we were talking about with Buffett in Japan.
Right. Who knows what else is out there just waiting to be discovered?
It's all about keeping your eyes open, staying curious, and not being afraid to think differently.
That's what I always say. Don't be afraid to ask questions, to look for different perspectives, to think for yourself.
Yeah, because at the end of the day, it's about making those informed decisions, taking smart risks, and shaping your own financial future.
Exactly. You're in control.
And who knows, maybe someday it'll be you making headlines like Warren Buffett with some brilliant move that nobody saw coming.
I love it. The listener making headlines. It's a great image.
Anything is possible in the world of finance, and that's
Yep.
what makes it so exciting, right?
For sure.
So, to everyone listening, until next time, keep exploring, keep learning, and keep diving deep into this fascinating world of finance.